recording, or you are recording? How do you do that? How do you record? The software does it for you?
Yeah.
Okay,
I just
good.
have to hit a button.
Okay,
It's
and where
recorded.
does it go? Where does it archive?
It archives at Capital's discussions, and then they move it out to YouTube.
Oh, how nice. Okay, do they do any editing, or they just leave it the way it is? Or do you know? You know.
Pretty much they leave it the way it is.
Okay, good. Well, you're not trying to do anything with it anyway. I wish you were, but you're impossible to convince. So
I'm still thinking I haven't. You say they got.
Yeah, I mean, you're doing. It depends. You know, even if you're at a point where you say, I don't actually need that extra money that I would get, it's not a bother with. It's the fact that you can help a lot of people. I don't know if that's your goal in life, which it may not be, but at my stage in life, I'm much older than you are. At my stage in life, I have done everything I need to do with family, and I have trained some people, and they're making money, and so now this is a give back. Okay, here is this. Can you see my screen now or not?
No, I haven't seen it yet. You have to.
What do I have to do that? I have to do something.
Yeah, go to Quick Start and share your screen.
Quick Start, and I don't know if share screen. Okay, let's see, more options. Let me see what that says. It gives me the monitor choice. That's good. Okay, so here's an actual trade that's been on. This one I'm showing you here is in the simulated account for one of my customers. But it's illustrative of what I'm doing here, which you already know. I'm going to go to the Analyze tab. And I've got the CL up here, apparently. Okay. So right now, this is in an almost perfect position. This includes both the CL. Here, it's what it's showing here. In this case, it's showing all, and it's showing the CL future, which I'm long 1, and I'm short 2. And let me get this price slices open. And this is showing that I have a delta of minus 208, 212 right now. And it's showing that I'm collecting about $88 a day. And then it is showing that since this has been open, it's made $579. It's booked. And then it's showing that today I've got this coming in $49 so far. I haven't touched this account, so this has been done without any management. And basically what it is, of course, is the white line is showing today. I'm repeating this in case that other gentleman that's in here might not be following, if he can even hear. And oh, we did. Excellent. Okay, so right now here is today's price. This is what is happening today. So oil right now is trading at $53.86. Am I right, Mr. Rose?
Current price is $53.66. Yeah.
Okay, so here it is, 66. That's correct. That's correct. Per contract. This is only a one contract deal, and you can see here it requires a margin of $6,000, and on margin this thing is paid off very, very well, because I could have closed it before for $900. But it's a paper account, I didn't bother, and that was only after about 8 days. So 8 days with a margin requirement of $6,000, that's a fairly nice return, providing this is a riskless trade, which in my opinion and your opinion, it's relatively riskless. The world thinks it's very riskless, but you and I don't think so. Am I in agreement with you there?
Yep.
Okay. So this is where it's going to be at expiration. The expiration is the 18th of January, not far away. So right here, if the price stays here, and if we look down here, this is what this is additionally going to earn in premium. So right down there, it's showing that we are going to be making $2,332 which if we actually yield that amount, which we won't because I'll close it early, but that would be a nice return on margin, providing the trade is safe. This is indicating, of course, you know, but maybe the others that are on here may not know. This hash mark right here is showing what my break even is on the low side, and it's showing me what my break even is on the high side. And this is today. So here I'm making $577 approximately, which is right here, confirmed. And if I go to, if the market goes down, I can go all the way here and I'm still not losing any money. I can go all the way here and still not losing any money. That's today, because the white line represents today. The red line represents what this is going to be worth at expiration. So ideally, what we want to do is keep it more centered. But there's no need for an adjustment right now, in my opinion. And one of the reasons for that is the delta is minus 212. So that's telling us that this trade is going to benefit if it goes down lower. So now we look at a chart. Well, let's go to a chart that we looked at, the one that you were looking at. So here is charts. I've got more than one thing on this set up here apparently. So I'm going to make this one big. Maximize sell. And now I'm going to switch to a daily like you had it. This is my, let me get rid of all these stuff here. So I'm going to go here and I'm going to say remove all drawings. There we go. And goodbye drawings. And now we've got this. Now I'm going to clean up this chart, make it plain. And there is what you were looking at, but this is a 5-minute chart, I think, a 30-minute chart. I'm going to change it to a daily, and we'll look at that butterfly. So now I'm going to tighten this up. There we are, and there's our butterfly. So all I'm looking for is the previous swing to where this is at right here. So I'm taking this major high on the previous swing. So I'm taking that. I'm taking my drawing tool, which is right here, and I'm drawing from this high down to the low on the chart right here, and that's showing me just what you said, that it's hitting the 127. Okay? Now, interesting enough, here's what it did. There was a trend down. Every day it kept going down. There was a little blip here, but mainly this was a strong trend down. If it doesn't break this 382, according to the system that I use, which is Larry Pesavento's, according to that, the trend is still intact. So unless it broke this 382 with gusto, we can expect it to come back down, which it did. Then it went up here and it hit between these two key points here, the 618 and the 786, and that's supposed to stop it and reverse the trend, which it did. It did it exactly. So it knocked it down at the 618. It came down here, it retraced, and then it went up to here. So here's what we're looking at in the way of a pattern. We've got this guy right here, down to here, and then the buyers and sellers decided that this was a place that they got nervous about, and they came back here. It retraced again, and it retraced again to the 618. If I measure this swing, it's going to be approximately at the 618 of that. So it's just remarkable. I'll draw that in after I finish this. So now it came up to this 127. By the way, it came up here close to the 127 earlier and came down. Right. But we're going to look at today, and there it is, and there's our butterfly. This is the butterfly shape. And it's remarkable how frequently these patterns hold, and the only way that anyone has to become a believer is just draw them, and they'll see that it works all the time on any time frame. Larry Pesavento, who wrote the two books that you've got, which is the Fibonacci patterns, Fibonacci ratios and pattern recognition, and in that book and in the videos that he has, and he's been doing it for 50 years. He's had every major job in the industry. Michael Milken, the old bond king, Larry was his boss, so at Drexel Burnham. So he's got good credentials, and he studied this for years and years and years, and he says it works, and it does work. But then everybody says, well, why does it work? Well, everybody has a different explanation. I don't know what yours is, Rick. I don't think we ever talked about it. But some people say that it's a result of so many people using the fibs that it is self-fulfilling prophecy. And so now just to see how these things reversed, here I said that it reversed down to approximately the 618 and then bounced off of that. So we'll go here and we'll put some fibs there. And we'll go here, up to here. And what I'm going to do now is I'm going to retract these here by saying cancel right extension. Now we just got this one being measured, and you can see it went right down to the 618, to the tick. Would you agree?
Yep.
And so that what am I on here now? I'll go back to this drawing tool, and I'm going to take here, and I'm going to draw, and this is another one of the patterns. It's just a triangle pattern. Hit the 618, bounced off, and zoomed up. So that's what this thing does. And now we expected when it hit this 127 of the larger swing, we expected it to come down, and it did. So now if we go to a smaller time frame and decide what it's going to do next today, that will be interesting. So I'm going to switch here from a daily. I'm going to go to a 5-minute, and here's our 5-minute chart. This is 5-minute, and it is 5 days. So what I'm looking at here is we've got this same pattern forming here. I'm going to go here, pick this high. I'm going to go down to this low. And then I'm going to see what I could have predicted it did. It went right to the sweet spot between these two orange lines. That's why I got them colored differently. So this was a pattern that was tradable. I'll draw that in real quick. This is a 5-minute chart. And draw that where it hit the pattern. That would have been right here. Well, actually, it went up to here. But we would start be looking somewhere around here between the 618 and the 786. And if we look at a cheat sheet, which you and I have, that shows that we should expect it to turn. And it did. And now we've got this question here as to how high this is going to go, and do we now have another possible Gartley? Well, we take our other tool here, and we draw from here, and we go up to this high point, and then we come down to here, and this is projecting where it's going to go, except that it's not a real ABCD. The reason for it is, for that to have happened, it would have had to retrace down to here, and then we'd be looking at it. So this is not a valid pattern, so we'll get rid of that. And now we'll look at potential here. So what I would do is I would go here to the trade tab, and I would go to active trader, and now I could actually trade this. And there's a trade on here already, but I can go to another account and we could actually trade it. But so this account is making $920 overall on the future alone. This is just the future, long just one future. We're up $900. Those that don't trade oil don't know how wonderful that Rick and I think this is, because every penny is $10. So if it moves a penny, this is going to change by $10. If it moves, so you got something that you can trade because you got something that's making money all the time. In the meanwhile, you don't. If you trade this with stops, you're going to get eaten up. But if you trade it with stops on anything, it doesn't matter what the underlying is. Stops are evil. Stops don't work. The reason why stops don't work is because you are risking, let's say you wanted to risk a reasonable stop on oil, you're risking $200. So you put a $200, if you put anything less than that, you're going to get just whipsawed. So you put a stop in of $200, And as soon as it moves 20 ticks, 20 pennies, you've just lost your money. So this is true whether you're trading the ES or anything, in my opinion. You know, and Rick, I think you would agree with that, right?
Yeah, no, it's tight. You need them, but
you got to have a big one if you're going to trade. Yeah.
Yeah.
And see, we eliminate that because we go here and we look at the CL and we see that we have a built-in hedge. We do not need a stop because this is protecting us. We're paying a price for the insurance, so we're losing 360. We're making 900 on the futures, so that gives us a net. If we close both sides out, we have a net profit of 550. But we did it with little or no risk. So this is the beauty of this system and why everybody in the world doesn't trade it. Rick can't explain that to me. Or can you?
Nope.
Okay. So, there we are. Pardon me?
Other than they say it's too risky.
Yeah, they say it's too risky. Yet they'll be willing to trade it with a stop, or they'll trade some any other underlying, or they'll have 42 different things on that are counterproductive, like some of the things that I've seen. Don't mean to knock anybody else, but I've seen where they have eight different legs on. There's one company that I know of that's in Utah that has special software because most things can't trace 8 legs, can't keep up with it. They have a position on which is relatively safe. In fact, it's real safe. But you've got 8 legs, and you've got all those commissions and all that management, and you end up making pennies. You might as well just do as some people do, sell far out of the money puts or calls, and then just sit back and collect a little bit of money. But that's the old collecting nickels and dimes ahead of the steamroller. Eventually, you have one loss, and it wipes out all your wins. And that's the problem, in my opinion, with the guys that are trading 5 delta, 3 delta puts, selling them, collecting a little tiny bit of premium, and yes, they are relatively safe, but then after they're doing it for 6 months, they've collected a little bit of money with a lot of margin. And then they have one loss, and now they're not only lost everything they made for the 6 months, but they're in the red. So I don't play that game, and I don't understand that game. But anyway, Rick knows this stuff better than I do, so I should let him talk.
No, okay, so
let's go back to the chart.
Where's
it going to go? Okay,
well, I'm
today.
trying to figure out, is this thing going to go back up now?
Okay,
that
I will.
Done the butterfly?
I'll tell you what I believe. Okay.
Okay.
What I believe is that this is now trading above this line here. See, I have a plain chart and I have a chart that's busy. So right now there's the plain chart. Okay, the plain chart is telling me this is a 30-minute. I'm going to go back here. I'll go to a 15-minute if we're trying to project something here. Okay, so where this thing is going to go according to this is that the up moves, which are my clear bars, my down moves are the solid bars. And what's happening here is that on these up bars, we're getting an increase in volume. So apparently the market likes this when it's going up. Now I'll throw this on. And this is another indicator here, which is the on-balance volume. And that tells me that there is more buyers, which this is confirming, than there are sellers. It also tells me that the trend here, according to this MACD, there's still increasingly green bars, so it's expected to keep going up. Now, if I switch here, this is a 15-minute chart. I'll switch to the 5-minute chart, and we'll see here that it stalled out right where it was supposed to stall out. And what does that mean? It stalled out at the top of the Bollinger Bands. It also stalled out at this 786. So where is it going to go? If it breaks this 786 with gusto, if it moves up here large, bumps it way up, we'll go to a bigger chart here. we'll go to charts, and then we'll go here. This is a 5-minute chart. This is exactly what's happening. It hit this 786, and it's stalling out here, so it can't bust through there. Now I'll go ahead and put my nonsense. I call it nonsense because it's really not necessary. I put that on, and we can see here that the buyers changed their mind. Now we've got a weak number of buyers. We can also see that here because the volume on these bars after it hit this. So that is telling us what? It's telling us, first of all, that the market in the next few minutes should be coming down. So we could scalp this if we wanted to, and it would come down. I wouldn't do that. The reason for it is there's not much potential here on the short term. The reason why there's not much potential on the short term, these Bollinger Bands are tight. What are the Bollinger Bands really reflecting? They're reflecting 2 standard deviations away from a mean. So our mean is this 20 moving average. So if it moves 2 standard deviations in this direction or that direction, so when the Bollinger Bands are tight, there isn't much potential to make money. So this is going to come down, hit this 20, and it's going to bounce off. It's not going to break through there. So what I am anticipating for the next very short term is I am anticipating the market to go sideways. And now if I go here to trade, so I'm just already in a trade, and I don't anticipate losing or making much money on this trade for the next, maybe 3 or 4 bars or more. So for the next half hour, I don't think anything is going to happen. With this
come the end of the day too.
Well, the end of the day, as we know, this is a 24-hour market.
Right.
When you say end of the day, you're telling me that it's going to get very thin and the trading will go way down. It will still be traded, right?
Yeah.
There's a half hour. There's a break at 3 o'clock my time. I'm on Pacific time. The market doesn't trade, and then it comes back. At 2 o'clock it knocks off, and then it comes back at 3 my time. So there's a time there when the market is all but closed, but meanwhile the option is there. So the option is making money regardless of this being asleep for an hour. Doesn't matter. In fact, I like that because when this is asleep, according to this, I'm making $110 a day if this thing goes to sleep. This is the Theta, right? So this is making $110 if it goes to sleep. So let it go to sleep. That's why I kind of welcomed my decision to hold over all those days when it wasn't trading for New Year's and Christmas. So I held on to that. I wasn't collecting this amount. I was collecting about $80 because those days had to multiply in order for me to get closer to expiration to collect more Theta. Did I say everything right?
I think it sounded good. Sounds good.
Okay.
If it isn't, somebody else can correct you.
Yeah, well, basically what this is like owning an apartment building and renting something out. So you own the apartment building and you rent it out. Your tenant, every day that goes by, he has to pay you a certain amount of money. So the better example is insurance, because when you have an insurance policy and the life of the insurance policy is 6 months, and then you've paid for that in advance, you've paid for that insurance policy that the insurance company wants you to pay in advance, then you go ahead and you call the insurance company after 3 months and you say, hey, I got rid of that car, I got a new one. I stupidly bought a Jaguar. And so I got rid of the Ford, now I have a Jaguar, so I want to cancel that other policy. I didn't use up my 6 months, give me back some money. So the insurance company says, fine, we'll prorate it. You only get this much money. So every day that goes by, the guy that I sold this contract to, I sold 2 of these contracts to some guy that wanted to buy 53 calls. So every day that goes by, his contract is worth less because just like the insurance company, he's got less time to be right. So the time value is the Theta. And so this guy is the guy that bought this is paying me $88 a day for the privilege of having this on. The reason why it's not showing 88 down here is because there's another trade included here, which is this trade, and you can see now that's 110, of which $88 is coming from the oil, and $21 is coming from this ES contract, so that's a total of this. But if we just look at this one, then we can see here that we're collecting only 88 on this one. And that's the story. Now this is losing money rapidly today. Today it lost $500. On the call side, it lost $500. It only made $30 on this, or $20 right now. So we're still net profitable, but we're not doing real well today. Do I care about that? No, because I'm still collecting more theta than I'm losing on the whole thing. I'm losing, if it continues like this, I'm losing $37 a day, but I'm collecting 110. So I'm about $70 to the good. And this is going to change. So now if we look at my prediction and see what's happening here on the chart, we go here, and it's still being held. I said it was going to go sideways. Mm-hmm. And it's still going sideways, and the reason for that is the fibs told us that. It's holding right here. Now, so this is, now what is this telling me? Down here it's telling me that the buyers are flat. The buyers and sellers are about equal. This thing is flat. The way I read this is I look at the peaks. So right now, if it goes down below this peak, then there's more sellers. If it goes above this peak, there's more buyers. The MACD is confirming it because the MACD is showing that we're getting a decrease. The bars are getting less green, bright, and they're also turning down. So this is also confirming the volume on these 5-minute bars is decreasing, meaning that there's less people trading it, which this is already telling me. And now, are these lagging indicators or are they predictive indicators? I think they're predictive, but I can tell way in advance what's going to happen because of the fibs. So let me get rid of some of this stuff here. Remove drawing. Okay. Now it's going to go here. It's going to try to come down eventually because this 786 is proving to be fairly strong, and the Bollinger Bands are right there. If we see this Bollinger Band here, I'll make that bigger. If we see the Bollinger Band there curling down, that'll be another sign. So right now this Bollinger Band is turning up a little bit. Here's our bar coming down. This Bollinger Band is tightening. It's turning up, but it's very hard to see. Mm-hmm. So when there's opportunity to make money, these balloon, and that it makes perfect sense. They balloon because this is a measure of volatility, and they're ballooning because this is one standard deviation away from this. So if we went ahead here and we had a volatility indicator, we would see that when this is high, the volatility is high. So this is where I get my signals. Now, I said it was going to go sideways, and I said it might come down. This is telling me it might come down in the short run. I'll switch to a 3-minute chart and just to see for fun. I don't ever use it, but there's the 3-minute chart. Okay, so the 3-minute chart is telling us that it's going sideways, just like it did before. We got a little more potential here because on the 3-minute chart anyway, because it's widened. Now, I would never trade off this chart, but that doesn't mean it's not tradable. There's people that are foolish enough, in my opinion, to be trading on tick charts, and they're trading on a 30-tick chart. Well, it's meaningless. You're not going to collect much money if you're right. You're going to have the potential of losing, even if you say, well, I'm only going to lose. I'm only going to do 2 ticks. Well, if you're only going to do 2 ticks, the broker loves you because they're just going to keep collecting lots of commissions for you, but you're not going to make any money. And the reason why people lose money trading, of which I would say conservatively, in my opinion, it's 95% of all the people that try to trade for a living lose their money. And the reason for that is they don't give the market a chance to tell you what it's going to do. They just go ahead and they try to grab little bits of money. and then they have a loss. So they have 3 winning trades in a row. So they made $30 times 3. They made $90. Then they have one loss at 110, plus they had to pay commissions. So they're going to lose. And the brokers know this. The brokers know that the average life of a trader that comes in with, let's say, a $10,000 or $20,000 account, he's going to be gone in 3 to 6 months. So the broker's job is just to keep recruiting more and more traders. And that's the way it is. How do I know that? Because I have friends and relatives that are brokers, and they're basically telling me their job is selling. And so now we predicted that this was going to come down or go sideways. This is there. Now we'll go back to the 5-minute chart. 5-minute chart shows us that we're still right. When it gets down to this 20, it's going to bounce off. So it'll bounce off that 20 moving average. Why do I know that? Because this 20 moving average is very close here to this 618, which is going to offer also resistance. So these two things are going to converge, and it's going to temporarily bounce off of this. As to Rick's point is, how can I predict where it's going to go for a longer period of time? Let's see if we look at a 4-hour chart. Let's clean this all up by removing all drawings. Remove all drawings, okay. And hit yes. And then now we've got a 4-hour chart. So this is predicting longer term. And so now we've got a fib use here. We've got something that even labeled where we should draw from, this high. So I'm going to come here with my fib tool. I'm going to draw from this high down to this low. And it's telling me that right at the 618, it's holding again on a 4-hour chart. So right now, I'm predicting that this market is just going to go sideways probably for the rest of the day. Yeah. There's not going to be anything happening. Which, the way Rick Rose trades, that's fine because he likes that. Because now he's going to have more Theta collection. He's going to collect money, and he doesn't have any risk because the market's not moving to take away anything on that. Right, Rick?
Yep.
Okay, so that's what we're doing here. I'm going to get out of this and get back to Mr. Rick here. But anyway, before I do that, let me go back here to the Trade tab. And now we're back to this. We're making 830, and of that, 500 of this came from today. So we're long. So the market must have gone up today. Did it? Yes, it did probably. Let's see here. It's gone up here. Here it's up here. It's telling us it went up 48 pennies. So it's plus 48 pennies. It's plus $480. Now it's moved another penny. So there we are. It's exactly what happened. Okay, so this is just so easy and wonderful that I would like to convince Rick to start peddling it, but he don't want to pedal.
I say, working on it. Got to make up some slides and that stuff to go along with.
Okay. I can assist you with that. I'm fairly good at that. What I would do, frankly, is I would open up a blog or a website, and I would post all the stuff there and put in the slides and stuff there that would explain the system. And then people that were interested could just go to that website and follow along, and they would learn it. And if you were interested in making money, which you apparently aren't, at least not on this, you're happy to make $20,000-$30,000 a month on the trading, but as far as peddling it, you're not interested. But somebody that would peddle it, they would sell DVDs and sell a course, and they would make The thing today is so amazing because of the Internet. The Internet, we say, well, who would be interested in this? Well, there is, right at this very time, there's over 1 billion people on the Internet. And those billion people, most of them don't even know what a chart is, don't even know what a trading is. But the search engines and stuff, whatever they search for, if they search for how to make money on the internet, if you are, even though it's a trading way to make money on the internet, that would come up in the search engine.
Right.
So the fact is that this can be peddled. I hate to keep using that word. Okay, now I said it was going to hit this area here, and it was going to bounce off. And what time frame am I on here now? I'm on 5 minutes, I think.
5 minutes, yeah.
Yeah, okay. So I said it was going to come down here, and it was going to bounce off. Let's see if I'm right. What is telling me that it might bounce off? What is telling me that it's going to go sideways? First of all, here, this is going sideways. This peak is not below this. It's close to it. It's not above this. So that means there's an equal number of buyers and sellers. And the volume is very low. And the volume is decreasing as it comes down. So that would have told us that right here. And if you'll notice here, this is a leading indicator because it was predicting it was going to go down as soon as it turned. And lo and behold, it went down, but you got the signal way back here. You didn't get it right away. You'd wait for some confirmation. So as soon as you saw it turning, you wouldn't get it on that bar, but you'd start to get an idea that it's going to come down. So somebody that thinks they can do that and scalp, they can make themselves. I've got a guy here in town whose account this is, actually. I'm just using his paper account. This guy's a cab driver, and he works the night shift. He starts at around 3 in the afternoon, and he works till 5 in the morning or something like that. Yeah, it's a 12-hour shift. And he makes $300 a day as a cab driver. Before he goes to work, he makes at least $100 a day in an hour's time working this. So he is wondering why he keeps driving the cab. Because if he spent the same number of hours, 12 hours a day, it's actually 14 hours a day because it takes him an hour to get in and get his cab and fill out his reports, and then an hour at the end of the day to turn in his money and check out and then go home. So with driving time and everything, it's even a 14-hour day. He's making $300, which some people would say that's a nice daily living. And now with the CES show here in town, I'm in Las Vegas, he's probably making like $500 a day because the CES show has got close to 200,000 people here in town that are all taking cabs. So yeah. He's going to be busier. The CES show, I don't know if you saw any of the pictures on it. It further confirms the importance of our life and the ruining of our lives by technology. I'm a slave to technology, and my life is not happier because of it. Yesterday, I spent 4 or 5 hours fixing a network problem, and it was a painful 4.5 hours. I have certain computers networked, and all of a sudden the network disappeared, and it was asking me for network credentials. I didn't know what network credentials meant. Well, it's a fancy word that they've now changed to meaning password. So I didn't know that password was network credentials. So I had to Google that and figure that all out. I tried calling Microsoft. Microsoft is the operating system I'm working with, Windows 10, and very difficult to get through to them. And then when I finally got somebody, it took them. I asked them if they could come on my computer and see what I'm doing. Do you have paid service? No, I don't have paid service. Well, then we can't come on your computer. Would you like to buy paid service? How much is it? It's this much money. I said, well, I'm not interested in that. I can fix it myself. So they said, well, good luck. Bye.
Yeah, that's
fortunately, and fortunately they spoke English because so much of these call centers and tech reports are farmed out.
Yeah.
So I mean, this is horrible. So I saw what's going on. We are so far behind. I am so far behind the tech revolution because I saw what they just came out with tech on TV here. They showed the show and they went around and filmed certain things. It's not open to the public. It's only open to people that are stores and stuff that sell, TVs and
electronics,
stuff. Yeah, it was mind-boggling what they have in every way. So the improvements are so enormous. And this is why the rich get richer and the poor get poorer. Because if you can't afford to keep up with technology today, you ain't going to make any money. Evidence of that is the number of store closures. Macy's, big, enormous store chain. I got a phone call, one moment here. Big, enormous phone call store, or the phone call store. Okay, let's see what this is. This is Phoenix, Arizona. I don't know who that might be. It might be somebody like Larry Pesavento, because he lives in Phoenix part-time of the year. Anyway, this tech revolution is going to get worse. So Macy's is closing because you can go to Amazon and buy easier online and cheaper online than you can by going to the store for Macy's. So Macy's has become a display center. People go there, shop around. Do I like this sweater better than that sweater? And then they go on their cell phone and they see if they can't buy that same sweater elsewhere for $20 less. Macy's is dead. Sears is dead. All killed by the internet, all killed by technology. Another one that's dead is JCPenney. These guys, they're all closing up stores. They're getting rid of employees. I don't know if you heard that on the news today. It was on the news today. Macy's is closing. Well, Macy's is closing a large number of their stores.
50 or 60 stores, yeah.
Right. And right here in town, they've already laid off 240 people that had jobs there. So this technology boom is killing us in every way. And it's not killing me. It's not killing Rick, but it's killing the average person. So, and the average person can't afford the hardware and the learning curve to learn how to use it. So it's just amazing. They have TVs now. They have TVs, some of which are 8 foot long by 6 foot high, and they are 1/10 of an inch thick. You can take them like wallpaper, and you can put them on your wall like with a magnet.
Yeah.
And that screen is better and stronger, and it's 4K, and it's a better television and everything else. It would be a better monitor for trading. So, and you could use that same screen for trading because these new monitors, these new TV sets, have an input in the back where you can connect your PC.
Right.
So this is now that thing, when it comes out, it's going to be available in about 6 months. It's already out, but it's not available in stores yet.
It'll be expensive.
Yeah, it'll be $8,000, $10,000. So, people the average person can't afford it. Now, 4 years from now.
Wait a year and a half and it'll be down to 1,000.
Yeah, but you would say, what do I need it for? I would say the same thing. What do I need an 8 foot screen?
Yeah. See more stuff and bigger if you would compensate for a poorer eyesight. So
that's right.
Yeah, it's going sideways, narrowed down, and
yeah, I said it would come down close to this and start bouncing off, and this is narrowing, and so what this is telling me, and the trend is going down but slowly.
Yeah. And
this is telling me now we just had a blip sideways again. So this is predicting more sideways action, and we knew that all this time back.
Yeah.
So there's no potential here. Now, this is showing us that there's still a lot of people trying to trade it because this is showing us the volume at price.
Right.
So right now at this price where it's trading right now, there is 1,685 contracts being traded at that price. And by the way, that's only on this broker. That's only on TOS. This is only giving the volume, not on the whole market. These are the traders that are on this platform. So this is insane. And this is going to go here. Let's go to a bigger time frame. We'll go here to an hour chart. And now the Bollinger Bands are real tight.
Yeah, we're up at the top of that one.
We're up at the top of that one. That should be, well, that's already coming down because
stretched.
Well, not only that, we'll see it now on the 5-minute chart. So here's the 5-minute chart, and we can see it's already come down. So all these bars here are included, and that's why we see this high here, because that's included in the bigger time frame. So we were looking at a half hour or something like that. Yeah. So that's what it's at. So now, this is now the way I trade on multiple time frames. So I have a core trade on, which might be 45 days, which is Rick Rose's favorite time. You kind of look like that as one of your favorite times, right? 45 days out.
Right.
Yeah. And see, I'll have a 45-day or a 60 or a 90-day trade on, and then I'll trade against it with smaller time frames. So this is something that the people that teach or learn about options don't have any way of figuring it out. What time frame do you put the option on? So if we go here to all products, and we go here and we pump in, I think that we'll pump in oil. I don't know if this is oil or not. Let's just see. It's oil. So we pump in here. We've got our choice of all kinds of different ones. We can trade this contract here, which has 12 days left. We can trade this contract here, which has 41 days left. We can trade this contract here, which has 70 days left. Which one do I choose? Okay, this is the one I've got on, which is the 12-day. All right. In the 12-day, look at how many different choices I have. I'm only displaying 12. If we go here to all, we got choices of all kinds of stuff here to choose from. Which contract do I put on?
Yeah.
So now, the way Rick does it, if I'm correct in saying this, Rick will go here and we'll change this here instead of, this should have delta on it. It says it's got delta on it. Where's the delta? Right here.
Right there.
So Rick is going to come down here. These are all, this is all way out of the money. So let's get rid of this all because we would never trade those. Let's go down here to 14. So Rick would be looking to put a trade on. Tell me if I'm right or not here. You'd be looking at putting a trade on somewhere.
Down at the bottom.
Down at the bottom, right. Because that's 13 delta or something like that. Or he might, if he likes what he sees, he might go to a 28 delta. And for people that don't know what that means, 28 delta means that this is got a percentage of being out of the money, see, 28, so of 73. So the way you can round this off, you can say 28 from 80 is in the 70 range. So you can use that as a method for doing away with this other column. So this is telling me that I have an 80% chance if this was equal to 28. Well, it's 28. So 28 would be 72. So that's pretty close. So it's telling me that if I sell this one here, I've got the odds way on my side, which is why Rick doesn't lose any money, is because he's got a 73% chance that by the end of 12 days, this ain't going to be higher than what he sold it for. So that's what this all tells us. And this is all free software, which is available from all kinds of brokers. Rick, do you use Thinkorswim, or who do you use?
Thinkorswim.
Yeah, but it's available from IB. It's Interactive Brokerage. It's available from everybody.
I'm what I gather, IB doesn't have the platform that.
Oh no, I have IB. I have an account at IB, and I've had for years different accounts there. No, that's why I use this. The reason I even have an account at IB is because their commissions are lower.
Yeah.
But now Tom Sosnoff, the founder of this software here,
I got to make sure I might switch over to him.
Yeah, he just opened up a new brokerage as of January 3rd, just a few days ago.
Yeah.
He opened up a new brokerage, which he always uses strange names, like he called this Thinkorswim, and now his new brokerage is called Tasty Works. And his commissions are half the price of Thinkorswim.
Yeah, you only pay one way, and you do have to pay a clearinghouse fee. But
yeah, it's 10 cents.
Well, like,
no, the clearinghouse fee is included.
Futures.
Right, exactly. So anyway, it's half the price, so I'm opening up an account. He's got his own software. Will I use his own software? No, I will continue with the Thinkorswim software, but you can keep the Thinkorswim. I could close my account except for $500. I could leave $500 in here, never trade with Thinkorswim, but have all this technology available to me. They'll never take it away from me. I never have to make a trade. And now I've got all this here, and I put my trades on for half the price at Tastyworks. So he's already cut off. Tastyworks now has a waiting list. They aren't even
well, no, he's inviting people to join.
Well, there are some people that have already opened up live accounts.
Yeah, no, he's inviting people to join, and you have to be invited to open an account.
Yeah, how do you like that? He'll be the biggest broker. You know, let's just face what this guy is. Tom Sosnoff started Thinkorswim, and after starting with 3 people, at the end of 8 years, he sold to TD Ameritrade for $750 million. So the guy knows how to build a brokerage firm. And
yeah, well, that's from being on the floor. So.
Yeah, he was a floor guy.
Yeah,
I don't share your opinion about the skill set of a floor broker. A floor broker.
Well, no,
but he knows he knows the business.
He knows how to trade and make a living at it.
That's correct.
Because if you were a floor broker, that was it. If you didn't, you weren't going to be a floor broker.
Oh, you were there maybe 3 months or 3 days.
Yeah.
If you were working for somebody else and you lost money for 3 days in a row, they'd say, "Hang up your jacket, goodbye."
Yeah. No.
Yeah.
So I guess we're starting to ramble here. I think so. We probably close down and wait.
Oh, you're calling me a rambler. You're calling me a. Here, I'm going to surrender this to you.
No, you can't. I have to take it back.
Okay, go ahead. There we are.
All right, so I'm back to being the presenter again.
Okay. Oh, look you had a huge crowd here today. You had Michael Schell, and you had Charles
Olson. A couple of them already left, so.
Oh, they didn't like my ramblings.
Well, one gentleman that came in today was a gentleman that I met at, what do they call it, a SMOG, Silicon Valley Option Group.
Oh, nice. How many members?
I don't know exactly. It's one of the largest option trading groups in the Bay Area.
Okay,
it's got well over 1,500 at least.
Yeah, well, he probably
and he trades oil, and he's like me. You know, he's trying to get more people interested in it. And I guess his high school son, who is, I believe, a senior in high school, is trading oil and making a profit at it.
Good for him. Yeah, I have a grandson who is still going to school, is in his first year at college, and he had a job as a busboy at a restaurant, and he was making about $10 an hour with the shared tips from the servers. And he learned how to do this, and he quit his job, and now he's going to school making, with a very small account, making about $100 a day.
Yeah.
So it can be done.
Better than 10 hours a day of working. You got more free time. And
well, he only works on the trading. He only works 2 hours a day.
Yeah, no, I say if you make $100 a day at $10 an hour, that's 10 hours.
Yeah,
to get $100, and
he's working 2 hours a day at $50 an hour.
Yeah.
And so he's also
yeah,
and he's also set for life. I mean, he's taking a good major. He's in computer science.
Yeah.
But all right, guys. So not guys. It's just you and I. So these two guys, they apparently didn't like what they heard, or maybe they thought it was too basic.
Well, no, I think the one I'm talking about, he's still working, so he had to leave to go to work or go get lunch, I guess.
Okay, well,
so
I don't know if Mr. Shell or Mr. Olson, which one is still here, but if you are, you ought to spend time with Mr. Rick Rose.
Yeah.
It's
thank
free,
you,
Rick. Thank you. Sorry, I monopolized. I talked too much, didn't I?
No, you did good. You helped clear me up so that I can.
Okay, well, you already know all this stuff. You just go longer term than I do.
No, you never know. The guy that figures he knows it all is the one that's going to go down the tubes.
You got it. All right, sir. Thank you very much.
All right.
You'll shut this thing down, or I don't have to do nothing, right?
You have nothing to do. I just have to hit the exit here, and it'll be gone.
Thank you.
Thank you much.
Bye for now.
Catch you next week. Bye.
Yes, sir. Thanks.